Good morning, this is Rich Nelson with Allendale, filling in for Steve Georgie here. Now, in terms of today's trade on Friday, July 15th of 2016, looks like things might be a little more subdued than yesterday's exciting action. As far as outside markets, looks like U.S. equities were going to hit new highs here today. I see the September trade on the September Dow trading up 33 points today. Looks like the S&P 500 trading up to 2.4. So this will be kind of a slightly higher day, but still continuing the new highs seen for this U.S. stock market. In terms of U.S. dollar index, that's the last trade is up 12 points. Shouldn't be too much of a big mover for us today. Crude oil trading up 29 cents at roughly about 45.97. So still off those summer highs a little bit here, but not in a major way here just yet. As far as grains, keep in mind yesterday we saw the July contracts expire. Now looking at only September and December as far as main contracts on corn. And, of course, it looks like the August, September, and November for the ones we look at on soybeans right now. In terms of last night's trade, well, December corn did continue those losses, and we actually got down about $3.50 here at one point before rebounding back up to $3.58 and a quarter. So up a quarter for the day. As far as soybeans, the last trade on the electronic session was down 5 cents. Keep in mind here for issues we have ahead here, the issues, or I should say the prices, we got down to $10.32 and $10.32.5 last night here. We saw actual lows back on the 8th of $10.21. So reaching that lower end of this price range, we've been trading out on beans. Over on wheat, last trade up about a penny. Now, as far as news for us, of course, weather is the main driver for most of the news stories right now. Not a whole lot of change in the big picture regarding the current forecast. We are going to still see intense heat. A lot of people arguing about that kind of 12, 13 to 15-day outlook. Maybe some people suggesting it might be curtailed a little bit here. But as a whole, we're still going to deal with some incredibly challenging issues on these crops here, and certainly for the corn, the question is whether we can get by this issue. On the soybeans, the question is now what type of damage will be seen, whether it's only going to be a bushel or, maybe 3 or 4 cents, or 3 or 4 bushels. So certainly a lot of questions right now for us on the bean side that are still left to be answered. As far as overnight news on the corn, not a whole lot to speak of. Looks like a lot of stuff lined up on the soybean end. Unknown buyer purchased about 320,000 tons of new crop U.S. soybeans. That had actually been talked about here in the past few days. That will not have any major price impact for us today. As far as the overnight discussion on China, they sold a very good amount of soybeans in their government sale last night. 99.7% of the beans that were offered to local buyers, and that comes out to 386,000 metric tons here. So as far as that goes, a very good sale. Keep in mind, though, these were done at discounted prices, so this is probably not representative of an actual true price test here. As far as today's trade on the soybeans, we have an 11 o'clock report from NOPA, the monthly crush here for July. The trade expectation is 145.415 million bushels. Once again, that's 145.415 million bushels. Now, in terms of how that would fit in terms of the recent pace, well, that would be up 2.1% over last year's numbers. Good news on that side. However, Allendale still has some concerns about this domestic crush, especially on the oil crop numbers. To hit USDA's expectation, we're going to have to run July and August at 2.5% over last year. And one of those 2 months was a record last year. So we have to surpass last year's numbers by 2.5% for both July and August. At this point, we don't think that'll happen here, certainly not with our crush margin, which has been kind of challenging here in the past few days, maybe around the 65 to now 78 cent range here. Realistically, we'd like to see it about $1 or so if you want to get some very aggressive crush rates like this market is hoping for. Over on the wheat end of things here, overnight, Algeria announced they purchased 400,000 tons of wheat that will not be U.S.-based. Also overnight, we had some more confirmation about this declining crop out of EU. Looks like France announced through their own version of USDA, they call France Agri-Mer. They said last week that the soft wheat crop was 59% good to excellent. This week it dropped to 49%. So a very large 10% drop there. Certainly some challenging conditions after those very heavy rains in the month of June. So as far as grains, looks like mixed trade, more or less a way to wrap up this week on a very quiet note here. Like I said, we're all waiting on weather, and right now, it looks like this turn Sunday, Monday could be a very interesting time for us on these grains, on the weather end of things here. As far as cattle, we look for a mixed trade here with today's action. We're waiting on cash cattle to move here for the week. In terms of news for the week overall, well, we did see cash beef kind of turn down here on yesterday's trade. A little concerned about that as well. Also on the supply end, we're very amply supplied right now as far as cattle. 573,000 head is what Allendale estimates for this week's run. That'll be up about 5.7% versus last year. So we still have some very, very stout numbers we're putting out in terms of number of head being offered. Keep in mind on the weight basis, a lot of people, certainly Allendale agrees that yes, weights will be challenged with this very intense heat. Looks like 100 degrees or 100 plus lined up for Kansas and northern Texas pretty much for the next 2 weeks straight. That is a concern for us on the weight end. It will not solve our problem in the cattle market. It'll simply curtail our very ample supplies. As far as hogs, looks like numbers for today, probably more of a mixed trade as well. For the July contract, that will expire today at noon. Regarding the actual price, I can't argue too much with the current futures offering. Keep in mind, we will see a CME lean hog index today, post around 81 even. That'll be actually for cash hogs as of Wednesday. When you figure in Thursday and Friday's cash hog trading, which is what we're waiting here for us for this expiration price, probably about 80.30 to 80.50 might be a reasonable expiration price. As far as this week's run, 2.110 million head is what we estimate. That'll be about 1.5% versus last year, so a little rebound. Regarding this week, typically this is the normal smallest kill week of the whole year, is normally done right now. However, it looks like that'll be pushed off until next week here. Some issues on the packing end here, which will have to be recognized. As for big picture issues, keep in mind we're waiting for the seasonal small rebound, which happens for cash hogs right now at this time. It typically sees about a 2-week rebound into the month of August. It does not take out that May or June cash hog high, though. So, yes, we should see a small rebound in pricing, but at this point we can't say it's going to be a major rally at all here. So, overall action here as far as grains, mixed trade. We're waiting on weather, which, of course, is going to turn over the weekend. On the livestock, looks like mixed trade as well. If you do have a question about these markets, give Allendale a call, 1-800-262-7538.